Good morning, everyone. Thanks for having me so much today, and welcome. My name is Melissa Armo, and I own a company called the Swoosh, and this is probably going to be a great, very informative day for a lot of people who are interested in the market. There's a lot of people talking about a lot of different topics. I'm going to get right into it here. I can see everyone's questions. If you have questions as we go along, I'll try to look over and answer them as we proceed through the morning here. And I'm going to talk about one strategy to trade to earn a living. And actually, this is a great day to talk about it because there was a beautiful, beautiful move this morning in Nike. For those of you that watch stocks, the top watch today was Nike as a short, and it worked. And we will review that trade today. So hopefully you will learn something today about trading, about the strategy that I'm going to talk about, which is one focus, and I think that's important. If you'd like more information, you can email me at melissa@thestockswoosh.com or feel free to call me at 929-3200-GAP. And also, you can look for me to talk about the stock market on FBM. For those of you that watch Fox Business, I've been on and I'm going to continue to be on talking about stocks. So you can see me on TV. Let's get right into it here today. For the last 3 weeks, 2.5 weeks, ever since back from the Labor Day holiday, I wanted to review here the trading results if you had been in my live trading room. And the reason I think it's important to look at these results is twofold. One, it was a slow period to trade. So during a slow period, this gives you an idea what you could expect with the strategy I'm going to talk about today. And number two, this is great motivation for people if they really do want to trade for a living. I think a lot of people start out in the market and they learn different things and they never really, oh, somebody just said no sound. Can everybody hear me? I don't know if it was just Jerry or, can everybody hear me? Is it just Jerry? You can hear me? Okay, sorry, Jerry. I don't know what to tell you. All right, hopefully somebody can help Jerry. Anyways, getting back what I was saying, I trade gaps, which is a strategy we're going to go over, but this shows you results in the last 2.5 weeks with an advanced risk and during a slow period. Now, what's a busy period? A busy period is earnings season. Like we're coming up into the busy period. It's going to be fall. So there's going to be lots and lots of stock symbols to watch. So here I just listed all the symbols. This was the week from 9/11 to 9/15. The profit you could have made. This is all the calls in the trading room. You could have made over $6 grand. Then last week, there was a loss day in BBBY, 2 losses, but overall was still a good week. Total profit you could have made 9/18 to 9/22, 38.95. And then this week so far actually has been a very good week. Called Facebook Short Monday. Tuesday the 26th was DRI, that was yesterday, and we're going to review this trade today too. And today was Nike. Really nice move in Nike. So far, if you did an advanced risk, and I'll clarify what I mean by that in a minute, you could have made $4,900, $4,935. An advanced risk is anything where the risk is $1,000 at minimum. Now that does not mean that you have to risk that, but the important thing about discussing these results is that if you can get to the point where you know a system and strategy extremely well, which obviously I know my system well, I've been doing it now for 9 years, you can take an advanced risk and you could do this for a living. Although even half this would be enough for most people to earn a living, because in the last 13 days you could have made over $15,000, $15,490. So if you had divided the risk by half, risked $500-600 on all of these trades, then you could have made $7,500, a little bit more approximately, okay? $7,700. So the idea is that it's enough to pay you, but many people trade and do not know what they're doing. They're all over the place. They lose, as time goes on, they lose conviction in themselves, and their results show it, and their confidence goes out the window as well. So the thing is that there's nothing that helps your confidence more than results. I'm talking about real monetary results, and that's what helps everyone proceed, move forward, continue to do it. It's just that nobody wakes up, and is born learning how to trade the market. I didn't know what I was doing when I started out in 2008, so it's a process. Trading is a skill, but you've got to have a good system and a good strategy to do it, and not only that, I think you really need to focus. So in 13 days with an advanced risk, you could have made $15,490 if you divided that by 2. by a thirds, whatever, it's still profit. It's really good profit, and the period of time was slow. And that's the most important thing that I want to get through here. If you can make this kind of money in a slow period, imagine what you can make in a profitable period, okay? My results range from between 70 and 80% win ratio. It's about 78% for the month of September. It's closer to 80 for the whole year, but it depends on the time period. The 2 losses were the BBBY and Fennel was a loss from last week. Other than that, in the last 14 trades called in the room, there was only 3 losers. So that's pretty good. Ultimately, you want to take trades that make money. Again, it's the results. Your mind processes in your head, in your brain, and carries it through the day, even after the market closes. Assume you trade at 4 o'clock, or if you trade only in the morning, which is what I do, your mind processes feelings and emotions behind whatever you did in your trading day. Those could be positive emotions if you're winning. They could be negative emotions if you have losses. And that carries with you. It stays in your head. And this is what the biggest hindrance, I think, for people to move forward in trading and do something and be successful is people will carry memories from losses for years. Not just from the morning of the day that happened on that actual calendar day, they will carry them through for years, for months and weeks and years. And what are the odds then that that person would be successful? So if you're one of those people, and I'm speaking to you right now, you have to stop thinking about the past. Because if you don't stop thinking about things you did in the past, you're never going to be able to move forward and turn that around in your mind, which is exactly what you have to do. You have to build on the confidence level. It starts with a foundation, which is the strategy, which is what we're going to talk about today. But I'm telling you, this mind part of it, okay, is extremely important for you to be successful as well. I've heard lots of stories. I've heard a million stories from people about how they've taken classes and they've not, learned anything, or how they have, lost money in the market. I mean, I've heard every story that I could possibly hear. But again, not every method out there works, okay? Not every strategy works. So, I mean, if it did, more people would make money in the market than lose. So I think you have to consider the strategy itself before you decide to trade. Do you believe or think that it makes sense? And that's what we're going to get in here today. And Nike's going to be a good example of that. And I'm going to talk about the strategy, and you decide for yourself if you think what I'm saying makes any sense. But you've got to get out of a rut if you're in these mental blockages where you're thinking about everything you did in the past. You're never going to be successful. And then I say, why keep going? Because you're just going to spin your wheels round and round. So why are you here? We're going to talk about the strategy. It's a strategy, the one that I do, it's based on common sense. Hopefully you're here to learn that having one strategy, which is very important, is the key for you to make money in the market on a regular basis, and that's how you'll get good at something. That's how your skill will improve over time. Also, you have to make money on a regular basis if you want to day trade for a career, because, I mean, you can't be losing, and you have to pay your bills if this is what you're going to do, unless you're going to go out and get another job or a part-time job. It really is about common sense. I think it's about following common sense with your risk per trade. I think it's about following common sense with how many trades you take a day and why you're also doing that one specific strategy as well. So what I do is focus on stocks that are gapping in the morning, although you can look at them in the post-market after hours. So you can look at them after hours or in the morning. Stocks gap at night and in the morning, outside of the time from 4 o'clock to 9:30. I'm looking for moves that institutions are making in the stocks, in the gap, and then to follow it through. And then I'm watching those stock symbols, like today, for example, was the Nike, to see on a 1-minute chart to capture the move, whether up or down. Okay? So that is the principle and the philosophy behind what I'm looking at in this strategy itself. I'm looking for institutional money. It's a big flow of money going in a certain direction in what moves the market stocks, and it creates momentum, and it's usually with volume, and it sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. Who's in control, the bulls or the bears? Because this is very simple, very basic, except for a lot of people just miss this, all right? So it's who's in control of what's happening. Is the stock price dropping? Is it rallying? You want to be on the side of the power. You want to be on the side of the control. And I'm not saying you can't make any money at all being against the control, but you will effectively be setting yourself up to lose overall if you are constantly going against the control. So you've got to go with the control to be consistent, getting back to what I was saying, to have a 70-80% win ratio, to be able to only have 3 losers in 3 weeks. You need to follow who's in control to have the consistency. So institutional money is in charge of the market and stocks at all times. And that is an important thing to remember. And the overall market, and I'm talking about the SPYs and the QQQs, you can look at the Dow, the overall market is proving that, because the control in the U.S. market right now is in the bulls. The control has never lifted away from the bulls. And if we have time, we'll talk about that more here. So anyways, becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. Institutions, I mean hedge fund money, banks, which a lot of them are investing in the market right now. Learning advanced technical analysis is required to be successful because price is really what counts. And what does this mean? It means reading price action and charts, and that is what I do. And if you came and traded with me or learned or did anything with me at all in the trading room, did the class, you would learn how to read price action and charts. That's the biggest thing that you would learn from me. I would teach you how to do that day after day after day and in the class. Nike's results today, actually, I'll just quickly tell you this. I did not read the report. I don't follow fundamentals, but apparently they were positive. The stock gap down, fell, was a short. So, sometimes the fundamentals will be right there in line with the technicals, but sometimes they won't, and then what are you going to do? So you've got to read what's happening. If the stock price is dropping, regardless of whatever the report said, you can't deny that you wouldn't want to go long that stock on that given moment if the stock price is dropping. And if you want to make money, then you have to be short. So comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, and your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. And this is just common sense, okay? When you have a fund, let's just say, if they are buying a big position in a stock, guess what? It's going to lift the price of the stock higher. In fact, I called an option trade a couple of weeks ago. I have the chart at the end in Tesla. The stock rallied, lifted well over, made a brand new high, had a big move, okay? Institutions came in, bought the stock up. So it went higher. This idea makes a lot of sense. And if you are focused on that, when you sit down in the morning and decide what to trade, you'll be more relaxed and confident in what you do, because you won't feel like you're going to get taken out of something or hurt in a trade or lose in a trade willy-nilly. It's the idea of having the focus. So you can make money in the market if you know what to do. It's just that a lot of people don't. And they get sucked into bad trades and they don't focus. And you don't want to do that. I mean, the answer is simple. How are you going to avoid losing going forward in your life and your trading career? Don't be all over the place in what you do. Don't get sucked into bad trades. Learn the skills of how to read technicals and learn a good system. And good money management too. So there's one strategy that I focus on. And I believe that this is really the only thing that you can do to actively make money as a day trader consistently, because the way the stocks move, have momentum, the fast moves, they're on their own without the market. It's gaps. So I turned my system called Golden Gaps. So what that really means is just that the gaps are really good, that they had big moves. But what is a gap? For those of you that don't know, I'm going to be very basic here, just explain to you the definition of a gap, what it is. What is a gap? A stock gap, so the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So if the U.S. stock market closes at 4 o'clock and opens at 9:30 in the morning, if the stock closed at 4 o'clock Eastern Time at $11 and opened in the morning the next day at 9:30 at 10:50, the stock will be doing what? Gapping down. Stocks can gap up or they can gap down. So let's look at a chart. This was yesterday's DRI. This is a daily chart. Down here's the volume. The moving average is here. The price, here we have it. So this was, what was yesterday? Tuesday. So Monday, the stock closed here around 83-ish. Boom, gap down in the morning at around 80.50-ish. Okay? So this was Monday night, Tuesday morning. When you rolled out of bed, there it was. The stock dropped. It was a short. So what do? I'm looking to predict before 9:30 what this is going to do. Is it going to rally? Is it going to drop? And then you play it. And that's exactly what you come and learn from me. You want these to have big moves, and you want them to have predictable moves, and they're institutional moves. You can see here that this was a big move. So first it rallied, came up here to 81.70 something or whatever. This went to a beautiful, amazing number, around 77.50-ish or something like that. This is a big move. Look at the price point of the stock. This is an institutional move that happened yesterday. It was a sell-off. Now, this is Nike's. Again, what is a gap? This was this morning. It was in the pre-market. Time here was 8:46. Stock closed here the night before on Tuesday night. Gap down. Boom. So you get up in the morning and you're trying to figure out, what do I do with Nike? Should I go long it? Should I short it? Should I do nothing? Well, it was a short. Okay? And this did work today as a short. You could have made money shorting this today. So a gap is just a difference between the close and the open. Over here is a gap up. This was way back in July. Stock closed here, gapped up. Closed here approximately 53-ish. Boom. Gapped up to like 56 something. This was back in July. You could have gone long this bullish gap. Once again, you see the Megalodon move. Huge move. This is buying. Today we have selling and some shorts. Okay, so you have gap downs and you have gap ups. But it's the idea that you know what to do, that you would know actually that this wasn't going to fall and fill the gap, that you would not have, A, number one, not shorted it, and B, to not miss the long. Okay, same thing here. To know that this was a short, not that it was going to hold and be a buy into the support, which was over here. Okay. Feel free to ask me questions as we go along here, people, just so you know. I'm trying to scroll down. So gaps have huge opportunity. Why? Because they spot power money, just like I showed you in some of those charts. And that's opportunity. It's opportunity for you as an individual trader to be able to get in and get out in a quick move. It could be a couple of minutes. It could be half an hour. The idea is, as a day trader, this is what you want to do, although you can use my system for swing trades and options, but if you want to have the consistent day after day after day, Monday through Friday, you're getting in, you're getting out, you're getting a move. You're looking for a predictable move that you can get in and get out. Boom, boom. You're not trying to get it to a piggy target. You're not trying to ride it all day. Every once in a while, you can do that with some of these if they do something called a swoosh, but for the most part, you are looking to go in and capture and make whatever your goal is for the day, $100, $500, $1,000. And you really have to be that focused about it if you're really going to trade as a professional trader for a career. So how do you find gaps? People always ask me, easy. Just go into your platform. In the morning, you can look. If you had this, you could pull it up in the live day, but these wouldn't all be gappy now because it's already almost noon. But in the morning, you can see in your top 20 lists in both exchanges the stocks that are gapping down. It would be the losers. The clock's over this here, but you would have this column and this column, you would have 40 picks. And if you have a scanner already, you can do it. So there's plenty of places to find gaps. There's a plethora of places to find them. And like I said, I like to focus on the shorts, but there are bullish gaps too. So what do? I find gaps in the morning, I rate them using a checklist. That's the proprietary information. I created a checklist to do it because gaps really have to be qualified because they're not all the same. They're not all the same. Almost everything actually gaps every day if you think about it. And you can't predict every move that every stock's going to make every day. Even if you get into the right trend, it may not set up that day to do it as a day trade because you have to have the entry, you have to have the stop, you have to have the target. And many stocks also go with the overall market. And if you can't read the market correctly, which is very challenging to do, then you're going to lose, even if you get the stock right. Because on most any given days, stocks go with the market or the sector. And then you'd have to read the sector right or know what's going on in it, know every stock in the sector as well. So a checklist tells me what to do to get it. And I'm looking for something on its own specific that it wouldn't matter what the market's doing. Again, getting back to the philosophy of this, there's only one thing that can move a stock, and it's money, whether it's up or down. And it's not a little bit of money, it's a lot of money, or what I call power money. And power money is what is in charge. Power money is in charge of the stock's direction. Trends are set and move with the power money people, and there's a lot of them in the market, and there's a lot of money in the market, period. And that's why the idea of even making $15,000 in 13 days is a drop in the bucket when you think about the billions of dollars that are in the market. And that's why, you know, again, wrap your head around it conceptually. It's so many people are living in the past of things that they've been through that they just don't get it. So let's talk more about gaps. They happen in the market on a regular basis. There's almost every day you can find something. Every once in a while, it's not a busy day and there's nothing to do, and then you just don't trade. But for the most part, most days you'll find at least one good thing. However, some gaps are better than others. And some gaps are nothing gaps, or what I call no play. And some gaps are very powerful displays of institutional money, and that's the ones that you want to focus on find, and then I call it golden gaps. But the most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction that's already going. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do, and not only that, when a change is occurring. And that's how you're going to know how to take the trade and when the power money is going to flow through you. So I created a 26-point checklist. That's exactly what I did with Nike today. Nike rated 23 points. What does that mean? It means it was a really good gap. And the immediate move on Nike, which we're going to look at the chart, dropped right down $1 in the first 5 minutes of the day. And that's institutional money. That's how you're going to make money as a person doing this as an individual. And the nice thing about day trading is you can trade on margin or leverage. I call it buying power. You get it. You open up an account at a broker, so you don't need hundreds and hundreds of thousands of dollars to day trade. You're getting in, you're getting out. You're flat every day by 4 o'clock Eastern time. So you can really make your money work for you, if you think about it, much faster as a day trader if you're in and out quickly than you ever could if you sat your money in a certificate of deposit, savings account, or something like that. You can turn your money around faster, and margin really helps you do that. However, you have to know what to do. You have to know what to do. So you got to learn it. Anyways, it's all about getting the direction right. It's predicting the direction, taking the trade, getting it right, putting in the stop, and it's reading the price. And you kind of got to have to learn what real moves look like. Now this is a chart back from CMG. This stock has been falling off a cliff. I don't even know where it's at right in here today, but this stock has absolutely collapsed. It's lost more than half its value. If you go back in the last 2 years, this is a Chipotle, and it's a mess, okay? So this is selling action that's happening in this chart, and you can't deny it. I mean, that's what it looks like. And this is Netflix. This is one of the strongest things right now in the market. This is having buying. This is what buying looks like in Netflix. The stock has rallying, just going back since the end of 2016. Look at the jump the stock price has had. It's almost doubled. That's real. That's happened in the span of less than a year. Okay, this is a daily chart. I squished this just to show you back because I wanted to show you to the end of 2015. Anyways, the point I'm trying to make is if you have a focus, your confidence is going to be better, and it'll be easier then for you to press the button because you will know, you'll have the knowledge of what to look for, and you either see it or you don't. If you don't see it, you don't take the trade. Nike might not have set up today. It did, but it might not have. You don't take the trade if it doesn't set up. You need to have conviction to make money. This does not mean that every single trade that you take works. That's impossible. It doesn't work in any system at all. Okay? There will be trades, and there will be times when some things don't work, and that's why I tell people, you know, put in a stop. Some people don't like stops. They're afraid of stops. I don't think there's any reason to be afraid of stops. I've been using stops since the beginning of time, no matter what size I take. But, you know, I think that defines your risk when you have a stop in, but not every trade will work. The idea is that you win more than you lose. And when you lose, it's a fixed risk. So you just live with it. And you kind of got to just walk away, like last week when the BBY didn't work. Guess what? Came back Thursday, worked. You have to kind of have amnesia about things that have happened in your past if you want to move forward. And if you do, you keep getting better and better and better and better as time goes on, and you make more money. And you move forward in your life and your trading and your thoughts about it, your thoughts about trading, your thoughts about charts, your thoughts about traders. I think so many traders, when they talk and they talk together, and these kinds of lectures like today, it's a great forum for people to get together. But I think people want to talk so much about the negative. You got to talk more positively if you're really going to do it. Otherwise, why bother? Do something else. You know, you have to be optimistic to think that you're going to be able to be successful doing this. You can't go with the crowd of day traders because many of them talk about losses, things they've done, classes they've taken, stuff that didn't work, all right, mistakes they've made themselves, much of which many people know. I think it's really, really about deciding yourself individually and setting your course for your future, whatever you want that to be, and then keeping the focus even on that. Now let's talk here about DRI. This was yesterday's gap. Here it was. Now, what was this? A short. If you didn't know this was a short, you might have gone long the stock in here. Stock opened, rallied big, dropped. You might have gone long the stock in here, rallied in here. It was a short. It was a short here. It was a short here. It dropped and fell. It had a big red day. We looked at the chart, went to 77 something. But if you didn't know what to do, then you might have gone long it. So my edge is that I see this, see the rally here, see the rally here, and know that it's still not a long, that it's a short. And also to aggressively get in it wherever it is setting up, even if it looks like it's pushing back to flip. And part of this is knowing how to read the gap. So here was the close the night before. This is a 1-minute chart, but the stock closed the night before around here at 83.30-ish, opened in the morning, boom, around 80-ish, 80.40-ish or whatever. So it's the gap itself that allows me to say and predict that the stock price here is going to drop. Actually, here's the 15-minute. So here's the 15-minute. You can really see it here. It had a couple of ugly tails. It's the rally happening. But this is all between 9:30 and 10. Stock dropped. See how weak it was all afternoon. All afternoon here was weak as could be. You must have an edge, I think, to do this as well. That doesn't have to be some mesmerizing thing. It can just be something like what I do is I'm focused on shorts. I focus on the 1-minute chart. I focus on gaps. It could be just something so small, but you're really good at it. Like I'm really good at reading the live 1-minute chart in the live day. Like I'm really good, like in a live right time, I can see right away when something, like I could tell Nike today almost within 10 seconds of the open it was going to work. So that's my edge. You can get your own edge. You could come and learn from me, learn my system, and then get your own niche in it. Maybe you're good at doing the 15-minute. Maybe you're good at doing the later plays. Maybe you're good at holding to a bigger target like the DRI went to. Just find your own thing that you get an edge in, your own niche in it, even within a system if you learn it from someone else like me, like learn my system. But it's the point that if you're all over the place doing a million different strategies and systems and things, first of all, you're not going to get good at any of them, even on a basic level. You're not going to have the consistency, and then you're never going to get an edge because you won't be focused on it enough to do an edge. I mean, I've been doing this for 9 years. 9 years is not that long of a time in the lifespan of a human being, but it's actually a long time in trading to do one strategy. That is a long time. In fact, I'm the only person that I know that's been doing one thing for 9 years. And I know a lot of people in the trading industry. People are all over the place, and it doesn't mean they're not successful. There are successful people that do lots of stuff, but I'm telling you, it's harder. It's harder. When you get to the point where you're doing something, you're so good at it, it's less stressful. It's more relaxing. It's easier. I mean, I can't tell you that enough. I mean, you know, and you're still taking risks when you take a trade, but it's not as stressful. Here, somebody has a question. Let me go back. Hold on. Please forgive the direct question. Are you actually going to show us how to read and trade the gap? That is what I teach in my 16-hour class. I'm teaching you some bullet points here, some overall general philosophy. I couldn't possibly review that in 45 minutes. It's a 16-hour course. It's not something that you would just learn even in 1 hour or even in a day. So it's more complicated than that. But I will tell you that it's something that you can learn. But today is I'm trying to make a point today, which is focus on one thing, okay? And I'm also making the point that you're never going to get good unless you focus on one thing. The consistency is key to being a successful trader as far as doing it for a living, which means you can't have as many losses. And also the focus today is for you that even though you're not going to learn the 26 points here, and I charge for that in a class because the information is worth money, you will learn the point that I'm trying to make, which is common sense. Here, let me go to a chart. Here, this chart here, let's look at the market, which is that you really have to be on the side of control of the institutional money. And that in and of itself, actually, that statement that I just made is a huge amount of information they should take with you, into the future. And actually it's worth money too, but I'm giving it today for free. So many traders are thinking this market has reached a top. I don't want to get too off target here, but I did put this slide in for a reason. The market will make another new high. The market has barely just begun. I am on so many lists because I've been trading in the industry now for a while, and I get all the emails from like every place in the world. Do you know that everyone is calling this to be topping this market, except for me? The market is higher. So the point I'm trying to make is that you have to be with the side of the control. There is absolutely no signs of weakness in the market. Again, what's my edge? I can read price. And I'm telling you right now, the SPY is higher. It could be making a brand new all-time high right now for all I know. I don't know. Philip, write it in the room. Somebody tell me, what's the price of the SPY right now, the ETF, the spiders? The point is that we were at 250.32 was the previous high. We were close to that this morning. There's no signs of weakness at all in this overall market, none at all. So why would you short it? Why would you call it top? Why would you even think to do that? That doesn't even make any sense. Shorting tops is not a strategy. Buying bottoms is not a strategy. You will fail in the end if that's what you're thinking of doing. Okay, gaps is actually a strategy. I just happen to define a method or a rating system, a checklist of 26 points to define the direction they'll go. But gaps really are a strategy that exists in the market, and they're in everything that moves and trades. Shorting tops is something that people do. And people are going to get killed in this market because the Qs did look toppy. But that's not a strategy. Do you think if you ran a hedge fund and you had under management $100 million that you would short this market? Hell no. You're long. You're long for 100,000 reasons, okay, that are I'm not going to talk about today. But the point is, actually, I might talk about that at some point next on, FBN. The point, because the tax plan, Trump's tax plan is coming up. There's so many things that are happening. But the bottom line is, if you just look at the price of the charts in the spiders right now, there's no sign of weakness. The bears are not in control. It is very clear where the control is. Oh, here, I have this little chart from going back 2014. Look at that. Who's in control? Boom. The bulls. The bulls are in control. So why would you short this market? There we go, 249.26. There we go. So we're about $1 off the high, which we just made last week. Anyways, getting back in here, good questions, and I hope I didn't get too off track. Feel free to keep asking me stuff. But opportunity sets up daily in gaps, and that's how you can do it as somebody to rely on as a strategy for a living. And there's other strategies sometimes, but then they set up 2-3 times a month. But you still got to look every day for them. This also sets up consistency. Now, I talked about September, which was a slow period, but there was still something to watch every day. October, November, busy period in the quarterly earnings seasons. Now, let's look here at the trade in the DRI. Again, this was yesterday. Stock closed here, gap down, boom. Rally, dropped. This was today, gapped up a little bit, still very, very weak. And here was the short. Boom, boom. Take it, get out. That's it. You could have retaken this. Okay, you would have been trading later. But this is all you need. This is all that you need. Okay? So whether you do it here and get out here, whether you do it here and get out here, or do it again a second time, this is all that you're really looking for every day in a gap is one move. And this was a good move. So let's look at it. Entry price, short. This is a short now. Don't forget. 80.60. How many shares could you have taken? 1,500. Stop. 81.50, which means what? If you put the stop in and it goes over this number, before you get out with profit, you will lose. Now, it did not go over this number before it went profitable, but the point is that this is your fixed amount of risk. Exit 79.65, profit $1,425, and guess what? Minutes. And that's another benefit that I'm not really talking or lecturing about today, but I will tell you it's a huge benefit of trading gaps. If I wouldn't be doing this webinar today, my day would basically been done, 2 hours ago. So you could short it here, get the drop, get out. This is just this one move. And as I told you, the stock price ended up going to 77 something. In fact, it went, I think, like $2 through the low of the exit. But, if you trade in the morning, you're in and out, you're done. But what a nice trade. What a nice move. And it's in several minutes. So again, there's nothing like helping your confidence with results. But how are you going to get to that point? You have to think about the philosophy, what I was explaining about control and price, because it really makes a lot of sense in the stocks that I'm looking at, and specifically the ones that, like I said, that are gapping. So today was Nike, closed the night before here, boom, 53, whatever, 53.70-ish, gap down in the morning, 52.20-ish, open dropped. In other words, is that today you can write, somebody can write where Nike's trading at right now, 12.05, but this morning it was a nice drop. Closed here, boom, open, fell, short it, get the drop. See how here, once again, you're looking for the money move. Take it, get out, boom, boom. And obviously you have the targets. 51 was the target low, and here was 51.03. Okay. Anyways, if you shorted this one, the call I made in the trading room today at 51.77 with an advanced risk, 3,000 shares, stop was 52.20. This is actually a good stop for Nike. Exit 51.20, boom. You could have made $1,710. What a nice move. So, again, 51.87 it's at. Yep, it's weak. All right, so anyways, what if you didn't risk 3,000 shares? Even if you would have made half this, it would have been over 800 bucks. So do you see, again, it's you're almost going in like a sniper. You're going in like a sniper to grab the money out of Nike. Just take it and you just grab it out. You just take it and you get out. You take it and you get it into the move. This is the flush. This is the institutional flush. You want to get the flush. And if you're long, you want to get a flush up. Okay, so you want to flush. And you just get in with the flush. But obviously, if we're looking and scanning later and later and later, and you know how to do the gap and right in the morning pre-market, you're not getting this flush because it happens almost immediately. Do you see? So if you're waiting for a scanner after 10 to trade like most day traders, you're not getting this. This is done. It's over. I'm at the gym. You have to know ahead of the time, 9:30, before 9:30, what you're doing, or you miss the move. Because institutions, if they want to buy or short a stock on the day, if they have it all figured out, they know what they're doing. The orders come into the open, and they move on. And this is so easy to make money shorting something that's dropping like a brick. So you want to predict the move it's going to make, whether up or down, and take it and get the flush and get out. And if you take it with size, you can make money like this. Anyways, earning power is very important, which is what you learn how to do something, and therefore you can replicate it, and it's the knowledge. It's the knowledge of knowing how to do it. It's more than just the money. It's the knowledge. A lot of people come to me and they want to join my trading room. It's only open to people that are students of the class. You will never know what to do if I would stop the trading room if you wouldn't do my class. And in my class, you learn what I know. So it's not about just replicating it. It's about learning it so that you can continue doing it on your own alone and don't have to rely on anyone else like me or anyone else. If you want to trade for a living and be a professional trader, you have to understand what you're doing. And you have to have, number one, a high winning strategy. Number two, good money management. Like I said, I think stocks are very important, and also knowing we're going to get out, targets. And number three, it's very helpful to have a good mentor, either to follow in a class or a live trading room. But you've got to be consistent with what you're doing if you're going to do this for a career. And for me, the time of the day is also important. If a stock hasn't made its move by a certain time, then I don't like it or it doesn't look good. And I don't think that people should be trading all day. I'm not saying that there aren't days like yesterday in the DRI, which you could have made more money. You definitely could have done that a second time around or a third. But, when you have your goal in, if your goal's, $1,000 and you made more than that in the beginning of the morning, what are you going to do? You're going to sit there all day to try to make more and possibly lose the money you're up? Because until you're out, the money's not booked. Anyways, if you want to trade for a living, you can do it from home, which is another nice thing. So for those of you, if you're interested in anything I said today on my class My class is called the Golden Gap course. It teaches a 26-point rating system. That's you're going to know that Nike was a good short today. Also, how to take it. You learn the entries, how to enter and exit the stock on the day and the targets. And it teaches you advanced price analysis. You will really learn how to read charts much, much better after my class. I have a very unique way of looking at charts. It's one of the reasons I predicted the market so well. So if you come and want to do the class with me, it's this weekend, and you will learn one solid strategy to trade gaps effectively by reading the side of power, who's in control in the chart. And you'll learn how to read support and resistance to take positions in the right direction, which I think many people do the opposite. Also teaches a more proficient and advanced way to read charts, and I focus on technical analysis and gaps. And then we'll teach you how to get conviction in your trading and the market as a source of wealth that you can use for a very long time, as long as you want to trade. You've got to trade with the side of power for consistent profit. So it's really about chunking it out if you're going to do this for a career. It's not about the huge win all the time, although some trades will be really nice wins that will just drop out of the sky like nowhere, but it's the idea of achieving your daily goal, you know, whatever that is. And I do think that having conviction in your strategy helps, in your self-confidence, all of these things. And you can read books on that stuff and listen to motivational seminars. I mean, you can do all kinds of things to help pump yourself up if you're in a rut with your trading that have nothing to do with traders, okay? Just motivational things, motivational books and videos you can watch. Everything's out there on the internet nowadays. Good stuff, people, and it's free for helping your motivation. So empower yourself to trade. If you'd like to do my class, it is this weekend, September 30th and October 1st. Here was a nice little review from Vishnu. And the class is called the Golden Gap course. It is a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Retakes are free for the first month. So say you do the class in September, you can retake it for free then again in October. You get one free retake. That should be more than enough for everybody. The class is online. You can always call me. You can ask me in the room questions. You know, I'm here to help my students. It benefits me if people actually are successful. And many of the people in the room are successful, which says a lot about me. Everyone in the room is signed up for the room for the year. And that means they want to be there. It's not that they can't do the system on their own. It's that I make good calls like today in the Nike and yesterday in the DRI, and it's a support system. And I think anything you do that has a support system once you sign up to do the class to help you make the money back for the cost of the class or move forward, at least in your mind, with the confidence that the system works is a benefit, is a big benefit for you. So the dates of the class, like I said, is September 30th and October 1st, 9 a.m. to 5 p.m. Eastern Time. Cost of the class is $4,999. If you're interested, you can't sign up on the website. You have to email me directly at melissa@thestockswoosh.com. Now, I'm doing this for this class this weekend to try to really help people as much as I can. I'm giving 1 year free in the trading room. If you do the class and sign up by Friday. Now, if you can't do this weekend's class, you could sign up by this Friday, September 29th at 5 o'clock, and you could do the October class, which is October 14th and 15th, and then you'll get 1 year free in the trading room if you sign up. New students only. This is for by Friday, and this is a great deal. You'd be in the room then for a year for free with me, and which is huge. Anyways, watch me on Fox Business. Oh, here's the Tesla. This was the Tesla call. Stock closed here, gap up, rallied. This was the move up. So one of the things that I will say this about gaps really quickly. I know we're running out of time, but one of the things is that when you have a stock that's expensive, rather than day trade it as an equity trade where you need the margin, you could do options. So this was an option call that just had a beautiful lift. And again, the control here is where? The control is in the bulls. The control is up. So when you get expensive stocks, you can use it for options. This was a gap move and a gap up, and that's how I made the call. Any questions from anyone so far about anything? If you'd like a trial of the room, you only have 2 days before the class, Thursday and Friday. You can email me for a free trial, info@thestockswoosh.com. You can be in the end of this week. I don't know what we'll get, but probably something. And if you have questions or you're interested in the special with the trading room for the year or want to sign up for the class, I'll be around this afternoon. You can email me, melissa@thestockswoosh.com. Does anyone have any specific questions about anything? I think I did good with time here. Anyone? Anything? I will try to do a market video. If you want to follow me on YouTube, just go to the Stock Swoosh on YouTube. I will try to do a market video. It's very, very interesting because honestly, the market is just higher and it's barely begun. And I know a lot of people think it's topping, and I just see us exploding. I don't know when, but you know, I watch it every day, and we're so close to the highs once again. Any questions from anyone? A lot of info, thank you. I talked as fast as I could to squeeze it in 45 minutes. Although I talk fast normally. I'm practicing. I'm getting better with talking a little bit slower for TV, but you still have very short time to get out a lot of information. So, although I'm 100% improved of the speed of my talking. All right, thanks everyone. Have a wonderful, wonderful day. And I will talk to you when I talk to you. And thanks so much for having me. Have a great day with off-the-wall trading ideas. I'm sure you people will learn a lot. And if you want to reach out to me, email me at melissa@thestockswoosh.com. Thanks, everybody.